Hello everybody and welcome to the Import-Export Hub channel weekly newsreel. Bogdan here, your host for the coming minutes. Not that many, I hope, and I will try to be as briefly as possible when I will be passing through what I've picked up in terms of news related to shipping, logistics, imports, exports, and so on. And guys, without making this intro too lengthy, let's start with the quiz question for this week, which relates to avocados, as I understood that they are getting quite expensive in some parts of the world. So here we go. The question is the following. Who was the largest importer of avocados in the world in terms of value, of course, in 2020? And the options here are Japan, France, or the United States. And the correct answer is the United States, with some $2.5 billion worth of imports in 2020. And fun fact, guys, it seems that most of them are consumed during the Super Bowl, of course, as guacamole. And now that you know who was the largest importer of avocados in 2020, let's see how the Freightos index did on week 7. And we have the general index sitting at $9,745 with big positive changes in the sub-index connecting China to North America East Coast, who was up 6%, while on the other hand we have a 24% drop on the sub-index connecting Europe to South America East Coast. For the Trans-Pacific sub-indexes, the one connecting China to North America West Coast is up 3%. So we're talking here about $15,615 in absolute values. While the one connecting China to North America East Coast is sitting at $70,901, which, as I said earlier, is up 6%. For the crossways ones, we have China to North Europe, yes, which is down 1%, and we have $14,312, while China to the Mediterranean sits at $13,901. And guys, although the Chinese New Year is gone, or I don't know, the congestion in the Californian ports is less evident, the pressure is still there, as now we have some Chinese ports experiencing congestion. So don't expect big drops in the coming weeks. Now, moving on to the news for week 5, I've picked 3 news. And the first one comes from containernews.com, and it's about a Chinese furniture company called Loctek, which ordered a 1,800 TEU container vessel for just $32.6 million, with delivery in March 2023, so next year. Here we have, in this article, we have basically 2 arguments, one coming from Loctek's spokesperson, who emphasized the synergies and benefits of vertically integrating the ownership and, of course, the operations of the container vessel. And on the other hand, we have an argument coming from a Linerlytica analyst, who basically says that their endeavor is somehow foolish, as the new building price is up 30% and the freight rates surely will correct in the future. And guys, what do you think about Loctek's move? Is it a good one or a bad one? Personally, I've done some research. I've looked into Loctek, and this company, if you ask me, is quite huge, with some 3 factories, one of them located in Vietnam, the other 2 in China, with a total of 113,000 square meters, or I don't know, 1.2, 1.3 million square feet. And my guess is that they didn't came at this level by chance. And okay, maybe some incentives or subsidies were made. Let's not forget we're talking here about a Chinese company, but nonetheless, they must have some competitive advantage, and I don't underestimate the Chinese business people. I don't underestimate anybody, in fact. So what do you think about this move? Frankly, I find the Linerlytica analyst comments a little harsh, as basically it states that Loctek should stick to what they know. Do you think that the board of Locktech is that naive, or I don't know, they know something that we don't? Personally, I will bet on Lucktech, but anyways, this is a really interesting topic if you ask me to follow up in the future, if of course I get my hands on news related to them. My guess is that even if the freights go down, and they will go down, this won't be at the same level as the pre-pandemic ones. This could be one argument towards owning and operating a container vessel. The second one is related to the nature of what their inputs and outputs are. We have wood and aluminium basically as inputs, and furniture as outputs, which even though is not assembled when exported, still has a very low value to weight ratio. So I think could work out in their favor, of course, if the exported volumes are also high. A third argument could be the fact that you could offer big box retailers from the United States, for example, a door-to-door service, flexible and customized. And I don't know, with a vessel this size, you can touch other smaller ports on the US West Coast, for example, to avoid congestion. So if you ask me, this is another big plus. Again, it's just a personal opinion, but my guess is that the Chinese manufacturer knows what he's doing. Now, moving forward, my second news for week 5 comes from the EU Commission. I will be very, very briefly here. You have the link in the description below this video, as usual. And basically, the EU Commission formally ended its investigations concerning measures taken by Mexico relating to its exportation of tequila. The complaint was brought by the Brewers of Europe, who had argued that Mexico's refusal to issue export certificates for tequila was WTO incompatible, causing significant economic damage to one, I repeat, one EU company, more precisely Heineken, as Heineken is relying heavily on tequila as an input. And long story short here, guys, Heineken, via Brewers of Europe, filed a complaint to the European Union Commission. The European Union Commission contacted the Mexican authorities. They found out a solution or agreed on some compromises, whatever you want to call it. And now the alleged trade barrier is removed. And as a result, the Brewers of Europe have withdrawn their trade barriers regulation as well. And easy peasy when your name is Heineken, right, guys? European lobbying at its finest. Anyways, moving on with the news. The last one for week 5 comes also from containernews.com, and it's about some European freight forwarders who diversified their offerings, and now they became also liner operators. And basically this article covers 2 companies, one from the United Kingdom, which is called Uniocean Line, and the other one from Italy, which is called Calypso Compagnia di Navigazione. And I'm not going to cover what they've charted and from who, but I will reiterate, if you want, what I've always thought as a freight forwarder. And of course, I'm talking here about the big boys. If you want to thrive and not just survive in this environment, you have to diversify and challenge the current status quo of the shipping lines. And I don't know, maybe follow the example of Uniocean and Calypso. And maybe you may think that there are no more ships to charter or to buy, right? Well, let's wait until 2023, and my guess is that we will be flooded with them. So guys, with this being covered, I will now move on to week 6, again very briefly covering the news here. And the first one comes from phenomphenpost.com, and it's about fresh pomelos, as it seems that the US lifted its ban on importing fresh pomelos from Thailand. So good news for the US pomelo importers, as they can now source also from Thailand. This was the first news, and now moving on to my second news, guys, which comes from McKinsey. This is quite interesting, and frankly the only one that triggered my attention in this sea of supply chain tech startups who want to revolutionize the supply chain. and who, by the way, attracted billions of dollars in 2021. The company is called Nuvo Cargo. It has a very good niche, if you ask me, and basically it is a digital platform facilitating cross-border trade flows between the United States and Mexico. And guys, by all means, this is not an endorsement or something similar, but if I were, I don't know, a SoftBank executive, I would really focus my attention on this startup. And I don't know, this was just for your information, guys. I really think it's worth to follow up on this company. Good luck to the Nuvo Cargo team. Let's hope that they will achieve what they want. And now I will move on to my last news for week 6, coming again from containernews.com, and it's about the reliability of niche container lines, who, guess what, outperform the big boys in the liner shipping industry. But if you ask me, this is like comparing apples with grapes, so this is not that relevant. So why bother us with this news, if you may ask yourselves? Well, here I just want to point out a table with the top 14 niche container liners and how I anticipate some mergers and acquisitions for the coming months and years. And it doesn't have anything to do with reliability, but of course with the markets they are servicing or operational and financial performance. So I will keep a close eye for you guys on the M&A market, and until news arrive concerning this, I'll move on to week 7. And I will start with some big news, if you ask me, about the potential sale, or I don't know, the listing of DB Schenker, Deutsche Bahn's logistics units. According to industry sources, potential buyers include the Danish DSV or the Swiss giant Kühne+Nagel. But there are also news that, I don't know, Carlyle Group and CVC Capital Partners could team up and prepare to bid for DB Schenker. These are all rumors, as all depends on how Germany's national railway operators, so Deutsche Bahn, will decide to go through. But at this point, according again to industry experts, an IPO is the most likely outcome. So again, quite a big news here, and for sure I will follow up as soon as I have new information available. Until then, I will now move on to my next news, coming from splash247.com, and it covers the issue of the EU Commission's lethargy in tackling the unfair and discriminatory practices raised by CELCAT, which stands for the European Association for Forwarding, Transport, Logistics and Customs Services. And guys, I won't cover the entire article. You know my point of view on this matter, that something has to change given the colossal vertical integration of the liners and their bargaining power in relation with, I don't know, port authorities, terminal operators, tugboat operators or vessel owners. And I will say only this, which I don't know if it is relevant or not, but guess where does Miss Margaret Vestager, I hope I pronounced it correctly, which is the head of EU competition, comes from? And in case you didn't know the answer, she's coming from the same country where Maersk is headquartered, exactly Denmark. And by all means, I'm not making any sort of accusation here, but I find it strange to see how the EU is so far behind when governments from the United States, the United Kingdom, New Zealand or Canada have already in place working groups focused on finding if there is any sort of collusion in terms of ocean transport and the supply chains they are servicing. Let the lobbying begin, I say, and let's wait for the EU Commission on Competition to wake up and tell us that everything is okay and that there is no positive correlation between inflation and the current ocean freight rates, right? Anyways, moving on to my last news for week 7, I have one concerning CMA CGM, who just won the Beirut Port Container Terminal bidding as CMA Terminals, which is the fully owned subsidiary of CMA CGM Group, will manage and operate the port of Beirut's container terminal in Lebanon for the next 10 years. For this, CMA pledged some $33 million in investments, and 19 of them will be pumped in the first 2 years. And guys, again, I won't cover more about this subject here, but I will only make a quick reference to the fact that the owners of CMA CGM Group, the Sadeh family, is of Lebanese origin. And guys, with this being said, this was the news marathon for today. Thank you all for watching. I really hope that you've enjoyed it. And as usual, until next time, keep your business safe. Thanks.